If you're self-employed and you also own rental property, making tax digital could mean sending far more updates to HMRC than you expect. Most people think MTD means submitting 4 updates a year. But if you have a self-employed business, UK rental property, and overseas rental property, you could end up submitting up to 16 updates plus a final tax declaration. In this video, I'll explain why this happens and how the system actually works. Section 1. What making tax digital actually requires from you. Making tax digital for income tax begins in April 2026. It applies to people earning more than £50,000 from self-employment or property income. Under the new system, instead of submitting one self-assessment tax return per year, you must move to continuous reporting. Specifically, you must keep digital records, use MTD-compatible software, and send quarterly updates to HMRC. At the end of the year, you then complete a final declaration, confirming your income and tax position. Section 2. The important rule that most people often miss. Here's the detail that surprises many taxpayers. HMRC treats different income activities as separate businesses. The main categories are self-employment, UK property business, and overseas property business. Each of these is considered a separate reporting stream by HMRC. That means each one requires its own quarterly updates and year-end adjustments. Section 3. Let's look at a common example: a consultant with UK property. Imagine someone who runs a consulting business and also owns rental property here in the UK. Under MTD, they would need to submit 8 quarterly updates, plus 2 end-of-period statements and a final declaration. 11 in total. So the total number of submissions could be 11 per year for just those 2 income streams. Section 4. What happens when we add overseas property to the mix? Suppose the same person also owns a rental property abroad. HMRC treats this as a separate overseas property business. With 3 streams, that's 12 quarterly updates, 3 year-end statements, and a final declaration, reaching 16 submissions. Section 5. A quick but important clarification about multiple UK rentals. The good news is that if you own multiple UK rental properties, they are all treated as one single UK property business. So you don't submit updates for each individual property. All UK rental income is combined into a single update each quarter. Section 6. What all of this means for you and your business. MTD doesn't necessarily mean paying tax more often, but it does mean reporting information to HMRC much more frequently. This is why using accounting software like Xero and keeping precise digital records will become increasingly important. Preparing early will make the transition far smoother when these rules officially come into force. Making tax digital represents one of the biggest changes to the UK tax system in decades. If you have multiple sources of income, it's especially important to understand how these reporting requirements will work for you. If you'd like a detailed guide on MTD for landlords and sole traders, visit the ACTEC website. See you next time!